Hi, in today's video I'm going to talk about my recommended lot sizes for boom and crash and how much to risk per trade. But before I show you my recommended lot sizes to use when trading boom and crash, let me first explain on how much to risk per trade. Okay, so when it comes to boom and crash, a lot of people tend to risk more than they should risk as compared to currencies. So when it comes to currencies, yes, it's easy to risk like a 2% or a 5% per trade, but that type of risking in boom and crash doesn't really work out that way. So in order to succeed in boom and crash, like, you need to risk a bit higher. So now, how much should you risk, or how should you manage your risk management? So I've got two people here. Let's say we've got John and Mary, and both have got $100. And when it comes to John risks about 25% per trade. Okay, and Mary only risks about, let's say, 10% per trade. Let's say John enters 4 trades on one signal or in one trade, and if those trades were to happen or to lead into losses, how much would John lose and how much would Mary lose? So let's try to calculate that. Okay, so if John was to enter like 4 trades on one trade or on one signal and is risking about 25% per trade, so with these 4 trades he could blow his account, because all this, the 25% multiplied by 4 would lead into 100% and he would blow his account. So let's talk about Mary. So when it comes to Mary would only lose about 40% of the funds available in her account. Okay, but I don't mean that you should risk 25%. I don't mean that you should risk 40%. So what I'm trying to say is that try to risk as more as you can. Don't risk very much, because if I'm risking like John, okay, when it comes to John, he would probably lose his entire account with only about 4 trades. But when it comes to Mary's risking less, would only lose about 40%. So one thing, of course, I usually talk about almost every time is not entering multiple trades in one trade. Okay, so this was just as an example. So now I'm done on how much you should risk. So now, what are the recommended lot sizes? So the recommended lot sizes, so when it comes to lot sizes, everyone has their own way of trading. I've seen people using a lot size of 1 on boom and crash with an account having $100 who are making money fast, and I've seen people use a smaller lot size. So let's talk about the lot sizes. So what is the lot size to use if you deposit it between $10 and $50? So if you deposit between $10 and $50, the best lot size to use is the lowest one, which is 0.20. okay, and if you have an account between $51 and $100, the lot sizes to use, you should use 0.25. When it comes to $101 and $200, the best lot size you should use is 0.30. And when you have an account of $200 and $400, the best lot size you should use is 0.35. If you have an account of having between $400 and $600, the lot size you should use is 0.40. And finally, if you've got an account having between $800 and $1,000, the lot size you should use is 0.50. okay, so these lot sizes are going to help you like make money without having to blow your account. Of course, I've seen people having $100 account using a lot size of 0.8. Yes, you would triple the money you make. This also means that you'd probably lose the money fast. Okay, so as I have mentioned in this example where John loses about 25%, so with only 4 trades possible to blow your account, but if you would risk less, you would also lose this. But when it comes to boom and crash, okay, the more you risk, the more you earn. And again, the most important thing I've forgotten to talk about is that when it comes to boom and crash, okay, even when you're using the lot size of 0.20, it feels as if you're losing a lot size of 2, because yeah, when you're trading Boom Magic Cash, when you're using a lot size of 0.20, it feels as if you're using a lot size of 2 as compared to when you're trading currencies. So a lot size of 0.20 is very good. Okay, so as for me, I've been using a lot size of 0.20. I've not changed. Whether it's a $10, whether it's a $20, I still use the lot size of 0.20. Why is that so? Let me just show you this. So over the past few weeks, I've managed to turn like $60 into $300 with a lot size of 20. Okay, so let me just show you this. So as you can see, I've been using a lot size of 0.20. Okay, so now why is it that I've been using a lot size of 0.20 and why have I not increased? Well, when it comes to Boom and Crash, like for example, if I've got an account with $10, okay, and you are catching single spikes, so probably per spike you could make about $0.5. But once you continue trading, as you trade, maybe you get to have like $100. So when you have got $100, like per spike, instead of making $0.5 per spike, if you've got $100, you could probably make about $1.5 per spike. So since at that time when I was making $0.5 with a $10 account, and when I've got $100 and you're making a 1.5, so I felt like I did not have to increase my lot size, because I was already making more than I was making when I had $20, when I had $50. So the more your account grows, the more you also make money. So as for me, I found out that I don't really need to increase my lot size, because as my account grows, the money I make when catching spikes is still more than what I was making when my account was low. Okay, so this is it about what I had for you for today. If what I've been talking about made sense to you, okay, give this video a like. If you've got questions, feel free to comment. For more videos like this, go on and subscribe. Okay, and one more last thing, I'm kind of offering Boom and Crash signals. I've got 2 membership types, so the link to this will be in the description. And also don't forget to join my Telegram channel. Bye for now.